Let's have a look at the markets now. Joining us live is CommSec. Joining us live is Tom Piotrowski from CommSec. Tom, good morning to you. Start of a new working week now, so how do we begin today?
Pete, we'll kick off with a small loss, down by around 0.2% when the market gets underway later on this morning. That's the SPY's telling us at least. So that comes on the back of what was a mixed session as far as Northern Hemisphere markets were concerned. On the one hand, US markets were under a considerable amount of pressure. We had the S&P 500, for example, finished down by about 1%. It was actually up by more than 1% at its best levels. The market concluded that the US employment figures that we saw on Friday, even though there was a big jump in the unemployment rate, Pete, it was the first jump since January and the highest unemployment rate since March 20, that the US Federal Reserve nonetheless will still be on the front foot when it comes to raising rates in the medium term. So that just saw US stocks come off the boil and finished down by 1.1%, as I said, for the S&P 500. But European markets were quite a deal better. In London, the FTSE was up by close to 2%, and in Frankfurt, the German DAX was up by 1/3%. They had concluded that potentially, the moderation that we're seeing in economic activity at the moment could be enough to stay the hand of central banks, rightly or otherwise. So this week is a big week, Pete, for the local market. Tomorrow, we've got the RBA decision. On Wednesday, we've got GDP or growth figures. And on Thursday, an important speech that the RBA governor will be making in amidst a whole range of growth measures that will be released elsewhere further afield in the global picture.
Okay, Tom Piotrowski, thank you.